What if I told you that one simple choice you make right this moment could totally change if you end up retiring with a ton of money in the bank, or if you spend your later years always stressing about how to pay the bills? What if I told you that this choice doesn't need you to have a fancy college degree, a job that pays a huge salary, or even some big inheritance from your family to get going? The real truth is, there's this straightforward plan that way too many people just ignore completely. And it only asks you to set aside an amount that's about the same as what you might blow on a handful of coffee shop visits or quick snacks every single week. Hi there. What I do is help everyday folks like you figure out how those little tiny decisions about money can add up to massive, life-changing results down the road. If you're the kind of person who's really keen on growing actual, lasting wealth, then please go ahead and subscribe to this channel right now. And if what I'm about to share in this video ends up clicking with you or helping you see things in a new light, make sure to smash that like button. It really helps spread the word to more people who need it. Okay, let's jump right in with something that might blow your mind a bit. Did you know that according to the latest money surveys out there, more than 60% of people in America don't even have $1,000 tucked away for unexpected stuff? Just stop and really think about that for a second. That means the majority of folks in this huge country are basically one little hiccup away from serious money problems, like if your car breaks down and needs a quick fix, or you get a surprise medical bill that isn't covered. And here's the kicker. This isn't just happening to people with low-paying jobs or no education at all. Nope, it's affecting folks who have solid careers, went to college, and live what looks like a pretty comfortable middle-class life from the outside. The hard reality is that so many of us are caught in this endless loop where we make money, spend it all right away, and then do it all over again the next month without ever building up any real cushion or wealth that lasts. They might have a shiny new car in the driveway, the trendiest clothes in their closet, and all the newest gadgets on their desk. But underneath all that stuff they're buying, there's this scary truth staring back. They're actually broke, and a lot of times, they don't even see it coming until it's too late. But what if I said there's a way out of this trap? What if there was a tried and true method that could flip your entire money story upside down, and it starts with an amount so small that you probably wouldn't even notice it missing from your wallet? Today, in this video, I'm going to walk you through exactly how putting aside just $100 every single month could completely transform the path your life is on. But before we get into the nitty-gritty details, let me ask you a quick question to get your brain going. When you hear the words building wealth, what pops into your head first? Maybe it's those high-rolling Wall Street types making deals worth millions of dollars in a single day, or tech geniuses who start a company in their garage and sell it for billions. Or perhaps you think of real estate pros who buy up houses and apartments left and right, flipping them for big profits. Or even those lucky lottery winners who hit the jackpot and never have to work again. These kinds of wild, dramatic stories are the ones that always make the news headlines or go viral on social media. But let's be real, they're the outliers, the rare exceptions, not the everyday rule that most people can follow. The actual secret to stacking up wealth over time isn't flashy or exciting at all. It won't get you featured in a magazine or turn you into an overnight sensation online. In fact, it's pretty boring and straightforward. That secret boils down to three key things: being consistent with your actions, giving it enough time to work its magic, and harnessing the amazing power of something called compound growth, which basically means your money starts making more money all on its own. Now, here's where it gets really interesting and applicable to your own life. If you can find a way to save and set aside just $100 every month without fail, you're already putting yourself ahead of more than 60% of the people around you. Your friends, neighbors, co-workers, you name it. And no, it's not because $100 is some enormous sum that only the rich can afford. It's because the vast majority of people never build up the habit or discipline to save anything consistently at all. They might save a bit here and there when they feel like it, but life gets in the way and it fizzles out. So, let's break down what that $100 really looks like in your day-to-day budget. For a lot of us, $100 is roughly what we spend on grabbing lunch out a few times a week, picking up a couple of new shirts or accessories we don't really need, or keeping subscriptions to streaming services, apps, or delivery options that we hardly ever use. It could be the cash that slips away during one impulsive shopping trip to the mall or online. Or even those small charges on your card from things like vending machines, parking fees, or random apps that add up without you noticing. The point isn't whether you actually have that $100 floating around. Most of us do, if we're honest. The real question is, are you ready to redirect that money from stuff that gives you a quick hit of fun or convenience to something that builds your future wealth? This isn't just about cutting back. It's about making a mindset shift in how you view money, what it's for, how it works, and what it can become if you let it grow over time. I know what some of you might be thinking right now, and it's totally fair. $100 a month? Come on. That sounds way too small to make any real difference in my life. If you're barely making ends meet, scraping by from one paycheck to the next, squeezing out an extra $100 might feel like climbing a mountain. On the flip side, if things are going pretty well for you financially, $100 might seem like pocket change compared to your rent, car payment, or other big expenses. But both of those ways of looking at it are missing the bigger picture entirely, and that's what I want to help you see today. Let me tell you a short story to make this crystal clear. It's something you can think about and apply to your own situation. There was this wise teacher who stood in front of his class one day and said, "If each of you can commit to saving just $100 every month starting now, you'll all be millionaires by the time you retire." The students burst out laughing. At first they thought it was a joke or some kind of trick. How on earth could such a tiny amount turn into millions? But the teacher wasn't pulling their leg. He was talking about pure math and the incredible force of compound interest, which is like a snowball that starts small but gets bigger and faster as it rolls down the hill. And the coolest part about this whole approach isn't even the money itself, it's the habits and way of thinking you develop along the way. Habits that successful, wealthy people use every day to stay ahead. When you make that promise to yourself to save $100 each month, no matter what, it forces you to get smarter about your money. You start paying closer attention to where every dollar goes, tracking your spending in a simple app or notebook. You learn to tell the difference between things you truly need, like food and shelter, and things you just want in the moment, like that extra pair of shoes or fancy dinner. You build up discipline, which is like a muscle that gets stronger over time. And that discipline is what sets apart people who end up with financial freedom from those who stay stuck worrying about money forever. But okay, let's get practical here. How do you actually find that $100 in your budget each month? There are two main paths you can take, and the people who see the best results often mix both of them together. First, you can focus on cutting back your expenses, and second, you can look for ways to bring in more income. Let's dive into both so you can pick what feels right for you and start applying it today. Starting with the expense side, because that's often the quickest win for most people. Take a good, hard look at your fixed costs, the bills that come out automatically every month without you even thinking about them. Things like your car or home insurance, your cell phone plan, your internet or cable service, and all those subscriptions for music, videos, news, or whatever else. A ton of folks are overpaying for these by a lot just because they've been with the same company for years and never bothered to shop around for better deals or call up and negotiate. Insurance companies, phone providers, and the like, they actually count on you not doing anything on what they call customer laziness, so they can keep charging you more. But if you spend just a couple of hours researching online, comparing prices, or picking up the phone to ask for a discount, you could easily shave off $50 to $100 or even more per month. I've seen people save $200 just by switching car insurance providers after a quick quote comparison. And don't forget to factor in bundling services, like combining your phone and internet for a lower rate, or asking for loyalty discounts if you've been a customer for a while. Then, there's the subscription trap that's everywhere these days. It's like an epidemic. Think about all the streaming platforms for movies and TV, software apps for work or fun, gym memberships you signed up for but rarely use, magazine or box deliveries, and a bunch of other monthly charges that sneak up on you. These can add up to hundreds of dollars before you know it, and often You're paying for stuff you forgot about or don't use anymore. Do a full audit. Go through your bank statements or credit card bills, list every recurring charge, and ask yourself, do I really need this? Does it bring me joy or value worth the cost? Cancel the ones that don't, and you might free up $50 to $100 instantly. For example, if you have Netflix, Hulu, Disney Plus, and Prime Video, maybe pick just one or two and rotate them every few months to save big. This is something you can do right after watching this video. Grab a coffee, sit down with your statements, and start trimming. Moving on to your everyday spending habits, which offer even more chances to save without feeling like you're giving up everything fun. Small changes can lead to big results over time. For instance, if you eat out or order takeout a few times a week, try cooking at home more often. It's cheaper and often healthier. Shop for groceries with a list to avoid impulse buys, and look for sales or use coupons through apps like Ibotta or Honey. If you drive a lot, combine errands to save on gas, or consider biking or walking for short trips. Even things like brewing your own coffee instead of buying it daily can add up. That $5 latte 5 days a week is $100 a month right there. The key here is to be smart and sustainable, not extreme. Don't cut everything at once, or you'll burn out. Start with 1 or 2 changes, like reducing dining out from 4 times a week to 2, and build from there. These are real, applicable tips you can try this week to find your $100. Now, let's talk about the other side. Increasing your income. In today's world, with the internet and gig economy, there are more ways than ever to make extra cash without quitting your day job. This is where you can get creative and apply skills you already have. For example, if you're good at writing, design, or coding, freelance on sites like Upwork or Fiverr. If you like driving, sign up for Uber or DoorDash in your free time. Love animals? Pet sit or dog walk through Rover. Got stuff lying around? Sell it on eBay, Facebook Marketplace, or Craigslist. Or start a small side hustle, like tutoring kids in a subject you're strong in, baking treats for neighbors, or even creating content on YouTube or TikTok if that's your thing. The goal is to aim for an extra $100 a month at first, maybe working a few hours on weekends or evenings. Many people find this easier than cutting expenses because it feels like growth, not sacrifice. And once you start, you might discover you enjoy it and scale up. Remember, the method isn't as important as just taking action. Pick one idea, try it for a month, and see what happens. If it doesn't work, switch to another. This is how you build momentum in your life. Once you've nailed down how to free up or earn that $100 each month, the next big step is putting it to work through investing. This is where the true excitement kicks in, because your money stops being just static cash sitting in a bank account and turns into a powerful tool that generates more money for you. It's like planting a seed that grows into a tree bearing fruit year after year. Let's keep it simple. We're talking about investing in the stock market, which has historically been one of the best ways to grow wealth over long periods. But don't worry, you don't need to be a stock picker or day trader. The easiest way is through something called index funds, or ETFs, exchange-traded funds, which are like baskets of many stocks that track the overall market, like the S&P 500, which includes big companies like Apple, Amazon, and Microsoft. These are low-cost, low-risk over time, and perfect for beginners. Let's crunch some numbers to show you the power, and I'll explain it step by step so you can follow along and even calculate your own scenarios later. Assume you invest that $100 monthly in a fund that averages an 8% annual return, which is conservative based on history. The stock market has done about 10% on average over decades. Over 10 years, your total contributions are $12,000. But with compound growth, where your earnings start earning too, it grows to around $18,000. That extra $6,000 is free money from growth. Now, extend that to a full 40-year career. starting at age 25 until 65. Your contributions, $48,000. But the total? Over $350,000. Yeah, you heard that right. More than 85% of that wealth comes from compounding, not your hard-earned dollars. It's like your money is working a job for you, 24/7, even while you sleep, eat, or relax. To make this even more applicable, let's break down the math a bit further so you can see how it builds. Compound interest works by adding your gains back to the principal each year. For example, year 1. You invest $1,200, $100 divided by month. Get 8% return equals about $96 gain. Total $1,296. Year 2. Add another $1,200. Now on $2,496. 8% equals $200 gain, and so on. Early years feel slow, but by year 30, your balance might be $200,000, and 8% on that is $16,000. In 1 year more than your annual contributions. This is why starting young is key. Time is your best friend. If you wait until age 35, you miss 10 years of growth, and your total might be $150,000 less. Try this yourself. Use a free online compound interest calculator like on investor.gov or bankrate.com. Plug in $100 monthly, 8 to 10% return, and your age to retirement. It's eye-opening and something you can apply immediately to motivate yourself. But wait, there's more value here. Let's talk about where to actually invest that $100 to make it safe and tax smart. One great place is a retirement account, like a 401k, if your job offers it, especially if they match contributions. Free money. For example, if they match 50% up to 6% of your salary, that's like an instant 50% return. Or open an IRA, individual retirement account, Roth IRA, if you think taxes will be higher later, traditional if lower. These grow tax-free or tax-deferred, supercharging your growth. For non-retirement, use a brokerage like Vanguard, Fidelity, or Robinhood. Low fees, easy apps. Start with a broad index fund like VTI or SPY. Diversification is key. Don't put all eggs in one basket. Spread across stocks, bonds, maybe some international funds to reduce risk. And remember, investing isn't gambling if you do it long-term. Markets go up and down, but over 20-plus years, they've always trended up. Now, I want to add some real-life examples to show this isn't just theory. You can learn from these and apply similar steps. Take Warren Buffett, one of the richest people ever. He started investing young with small amounts and let compounding do the work. Most of his wealth came after age 60. Or everyday folks. A janitor named Ronald Redd saved modestly his whole life, invested in blue-chip stocks, and left $8 million when he died. A teacher, Ann Scheiber, saved from her salary, invested wisely, and built $22 million. These stories prove consistency wins. You can start by automating transfers from your checking to investment account on payday, set it and forget it, removing temptation. But here's the honest part most videos skip. The hardest thing isn't the math, it's the discipline against a world pushing you to spend. Social media shows perfect lives. Ads scream buy now. Friends plan pricey trips. You'll face choices. Invest the $100 or grab that new gadget. To win, develop investment automation. Treat it like rent. Pay first. Track progress monthly. Seeing growth motivates. As your balance hits milestones like $10,000, the excitement builds, pushing you to add more, like using a raise to invest instead of upgrading your car. Avoid lifestyle inflation. Let's expand on mindset shifts you can apply daily. Adopt opportunity cost thinking. That $100 dinner isn't $100. It's $500 in 20 years at 8% growth. Ask, what future wealth am I trading? Rich people see money as a tool for more money, not just spending. They invest in themselves, to education, health, skills to earn more. Read books like The Richest Man in Babylon or Rich Dad, Poor Dad for inspiration. Track net worth quarterly assets minus debts to see progress. Common mistakes to avoid. Don't chase hot stocks or crypto hype. Stick to boring indexes. Don't panic. Sell in downturns. 2008 crash recovered big. Rebalance yearly. Sell high. Buy low. Consider inflation. Money in savings loses value. Investing beats it. For taxes, use tax-advantaged accounts. If debt-heavy, pay high-interest first credit cards over 10%, then invest. As you grow, scale up. From $100 to $200 when possible. Side hustles accelerate Airbnb a room. Teach online. Build emergency fund. First 3-6 months expenses in savings for peace. Diversify income. Job plus investments plus side gig equals security. This transforms you. More confident, less stressed, open to risks like new jobs or businesses. Money buys options, travel, help family, retire early. Millions have done it from humble starts. Start today. Find your $100. Open an account. Invest. Best time was yesterday. Next is now. Your future self thanks you.